welcome back. Still watching Market Cafe on ET now. Thanks so much for staying tuned. Let's talk about some earnings fine print coming then. And Tata Motors is the one to talk about. Numbers came out yesterday. Profit rose to 5,692 crores versus 3,301 crores the same time last year. The company also said that the demerger of Tata Motors into two separate listed companies is expected to conclude in the next 12 to 15 months. Shrishti is here to break down the numbers for us. Shrishti, hi, what are the numbers looking like?
Well, a great set of numbers coming in from Tata Motors. Indeed, on the revenue figure, the numbers actually come in line to what we were expecting at ET now. But operationally, what a performance yet again coming in from the company, and especially the margins. The company has clocked in a margin of 14.4%. The profit has also seen a jump to 5,692 crores, above than what we were expecting at ET now. And also the EBITDA number is above to what we were expecting. So all in all, a great set by Tata Motors. And what we have seen is that the JLR performance was quite resilient this time around, and because of the lower commodity cost, their margins, especially in the passenger vehicle as well as commercial vehicle, though there has been a decline, but were faring better. If we talk about some of the other key announcements, then the company has announced a demerger of Tata Motors into the two separate listed entities, but that will take into effect in the next 12 to 15 months. So that's the announcement coming in. If we talk about their JLR division, then EBIT margin stands at 8.9%, very close to the previous highs of 9.2%. So a slight decline in this number is what we have expected, but the management commentary is very strong, because though at one point they are saying that there could be constrained production in Q3 and Q4, but the management does go up and go ahead with their full year guidance of above 8.5% of EBIT margin. If we talk about their India business performance, then here too the management outlook is positive. They are expecting good festive season sales this time, especially in the second half, and even for the commercial vehicle segment, the commentary is positive, but on a sequential basis, there is a decline in their EBITDA margin. But overall, the commentary is quite positive, though they are saying that the global demand is likely to remain muted, but they do expect a gradual improvement in the domestic demand, and the commodity prices are likely to remain range bound. So all in all, a great set by Tata Motors.
Surely keeping an eye out on that, but you did listen to the con call at Tata Motors. PB Balaji, the group CFO of the company, shares his growth outlook for FY25. What are they expecting in terms of demand trends going forward? Listen in to the con call highlights.
On the outlook, global demand is likely to remain muted as it has been, and we expect a gradual improvement in the domestic demand during the rest of the year after the festive season, on account of continued investments in infrastructure, healthy monsoons, favorable macros, and of course the festive demand that's likely. Commodities, on the other hand, are likely to remain range-bound. In Q2 and Q3 for JLR, we are likely to witness some amount of constrained production, reflecting the annual plant shutdown and also floods at a key aluminium supplier. As we work towards mitigation and recovery, we hold our guidance on our key full-year financial deliverables of greater than 8.5% EBIT. And achieving a net cash position from net debt and going net debt free. And we are confident of sustaining this performance in the coming quarters and delivering a strong year.
Alright, so that was the word coming in from the management as well, but let's take a look at what the street is making out of Tata Motors Q1 numbers, and you have brokerage notes coming in this morning, two notes coming in. First up, let's discuss what JP Morgan has to say. They have maintained an overweight rating, hiked the target price to rupees 1250 from 1115 earlier. They say that JLR shines in Q1, but the India PV segment needs a better performance in the second half of this year. Now for a segment-wise breakup, they've said that for JLR, the volume mixing commodity benefits are offsetting higher incentives. For India commercial vehicles, they're saying that the resilient margins are being seen in an uncertain demand environment. So this is something that they're liking for Tata Motors. And on the PV front, they're saying that the mix and operating leverage has turned negative. So mixed note coming in this morning from JP Morgan, but they've maintained an overweight rating and hiked the target price to 1,250 rupees per share. But on the flip side, if you take a look at what UBS has to say, while JP Morgan has maintained an overweight, you have UBS that has maintained a sell rating coming in, but they've also gone there and hiked the target price to 825 rupees from that 800 rupees per share earlier. So very diverse notes in fact coming in for Tata Motors this morning, wide range of price bands also being seen. They've maintained a sell. UBS, they're saying that for GLR, the EBIT is positive, but the order book is looking negative as of now. And for India business, they're saying that the CV margin and outlook is looking strong, but the PV margins, they continue to disappoint, and that is something that UBS is not liking for Tata Motors. So they've maintained a sell rating, and target price has been hiked to 825 rupees per share.